Embracer Group enters into an agreement to acquire Eidos, Crystal Dynamics, and Square Enix Montreal, amongst other assets. This was announced at 8 a.m. this morning. Embracer Group, AB, Embracer, has entered into an agreement to acquire the development studios Crystal Dynamics, Eidos Montreal, Square Enix Montreal, and a catalog of IPs including Tomb Raider, Deus Ex, Thief, Legacy of Kain, and more than 50 back-cataloged games from Square Enix Holding Co., Ltd., or Square Enix Holdings. In total, the acquisition includes roughly 1,100 employees across 3 studios and 8 global locations. The total purchase price amounts to $300 million on a cash and debt-free basis to be paid in full at closing. Embracer has secured additional long-term debt funding commitments for this and other transactions in the pipeline. The company today reiterates its current operational EBIT forecast, which, for those who don't know, EBIT is earnings before interest and taxes. So operational earnings before you deduct all of that. For fiscal year 21 to 22, fiscal year 2023, and 23 to 24, transaction is subject to various regulatory and other external approvals and is expected to close during the second quarter of the fiscal year of 2022 to 23, July through September of this year. We are thrilled to welcome these studios into the Embracer Group. We recognize the fantastic IP, world-class creative talent, and track record of excellence that have been demonstrated time and again over the last decade. It has been a great pleasure meeting the leadership teams and discussing future plans for how they can realize their ambitions and become a great part of Embracer, says Lars Wingefors, co-founder and group CEO of Embracer Group. Embracer is the best kept secret in gaming, a massive decentralized collection of entrepreneurs whom we are thrilled to become a part of today. It is the perfect fit for our ambitions, make high quality games with great people, sustainability, and grow our existing franchises to their best versions ever. Embracer allows us to forge new partnerships across all media to maximize our franchise's potential, live our dreams of making extraordinary entertainment, says Phil Rogers, Square Enix of America and Europe CEO. Huh. Okay. The portfolio consists of iconic franchises and IP. For example, 2 original IP, Tomb Raider and Deus Ex, have sold AAA units of roughly 88 million and 12 million respectively. Yeah, Tomb Raider, 88 million copies. That's crazy. Embracer sees an opportunity to invest in these franchises as well as the additional acquired IP such as Legacy of Kain, Thief, and other franchises. It also includes the continued sales and operations of the studio's more than 50 back catalog games. So they will start to acquire all of the money from like the last Tomb Raider trilogy. They will start to get the revenue from it. But I mean, do you really expect that to be a ton? Probably not. Eidos Montreal consists of almost 500 employees across Montreal, Canada, Sherbrooke, Canada, Shanghai, China. The studio focuses on creating memorable AAA experiences. It's led by David Nfosi, who has 26 years of industry experience. Prior AAA releases include Thief 4, Deus Ex Human Revolution, and Shadow of the Tomb Raider. The studio is working on a host of AAA projects, including both new releases from beloved franchises and IP. I mean, all of this, for one, I think it's a good grab. For the record, I think this is a good grab. I don't know about the purchase price. 300 million is a lot. But to be honest, like if Embracer Group can just come along and reinvent the Tomb Raider franchise alone and get that running to compete closer to like Uncharted, they're vibing. Like they're doing just fine if they can do that. And I think there's definitely the potential for it. So I think it's a good grab. let's see. Embracer expects strong growth in free cash flow during this fiscal year, and the years beyond. We remain committed to delivering on our financial leverage target. If net debt temporarily exceeds 1x net debt to operational EBIT on a forward 12-month basis, our intent is to return to below 1x net debt to operational EBIT over the medium term. All that basically means is if they get a lot of debt, they want to reduce it. Like, that's basically what that means. But it's good because Embracer, like, one of the fears with an acquisition like this is that, okay, Embracer's just trying to grab stuff and grab studios, even if the extreme debt that they would acquire through that potentially was a negative. They're kind of stretching themselves too thin to try to grab these things in. And that's dangerous, especially with interest rates rising, with currency fluctuations like crazy. It's just not, there's risk. So the fact that they're making it very clear they don't want to go above 1x net debt to operational EBIT, that's a good sign. They outlined some of the financing. Embracer has secured additional long-term debt funding commitments of SEK, I'm not sure what the exact name of the currency is, 4 billion, and extended one existing loan of 6 billion with our Nordic relationship banks, Nordea, SEB, and Swedbank. The additional bank funding commitment will finance our current M&A pipeline, including today's transaction. With the inclusion of the new facility, or facilities, I would think, we estimate to have more than 10 billion in available cash and credit facilities by today's date. We estimate current average net interest costs across the group is expected to be approximately 1%, including the new facility. I want to know what banks their work like. I know they say it, but it just goes to show you, like, when you're a huge group like this, the money you can lend is just stupid cheap. It's just stupid cheap. That's ridiculous. Under the new terms, Embracer does not hold any short-term debt on the balance sheet. We do not have any debt that expires before June 30th of 2023. And that's good. That's good. Because right now, all of the concern is over, like, Russia, like, launching nukes, and over interest rates going sky high, and COVID coming back. Like, there's a bunch of worries in the market right now. Most of that's going to be fixed pretty soon. Rocky, thank you. Thank you for the sub. Gifted 3 months of tier sub. Nobody gifted it to Rocky. Oh, thank you, nobody, for the 3 months of gifted sub to Rocky. That's fantastic. Thank you, my friend. That's very generous of you. Yeah, vibing indeed. I'm vibing. Vibing indeed. So that's good, because what this just means is that they are extending out the day that they have to settle that debt to over a year from now. So if anything happens in the next year, they can kind of roll with the punches because the debt isn't due at that point. And it just frees up that movement, which is good. So that's really good to see. Again, strong growth in free cash flow. A lot of businesses, this is most of what they care about. I wouldn't think that the gaming industry is as focused about cash flow, because it's so, like, it's all about surges, right? So some days or some months you'll have a game release and you'll just have a flood of cash. And then the next month, nothing. You might get some trailing sales for that game, but it dries up, right? Or then, 2 months down the line, you have another release and then a ton of cash and then nothing. It trails off. And so it's not really about that cash flow as much as it is about capitalizing on when the flow or when the cash initially comes in. Ideally, like, most businesses want a steady flow of cash, because that also helps you get more reliable, like, lending. You get better rates on debt when you can show regularized cash flows and income, because banks have to worry less. Because, you think about it, if you have one major release in the spring that's going to bring in most of your cash for the first quarter, then if that game flops and doesn't sell well, your whole first quarter is totally screwed. So banks don't like it when that's how it works. So with this, it's interesting that they're trying to focus on this, because that's typically been an issue in the games industry. But that's probably part of this. Like, Embracer Group wants to acquire as much as many studios as they can to more regularize their income and spread it out more evenly. Like, that's why everybody's so pumped in the business world about Microsoft and their Game Pass offering, because all of a sudden that issue of major release in the spring, tons of money, then no money, tons of money, no money, maybe some money, no money. It fixes it, because all of a sudden every month you're getting a guaranteed amount of money coming in. That's why these subscription services are so successful and why the stock market loves them so much, because that big question mark is gone, and that brings the value up in and of itself. So, I mean, that's pretty, the Embracer Group acquisition. I mean, that's pretty baller. Crystal Dynamics, Square Enix Montreal, all of the IP, Eidos, they picked up all of those. So let's see. I'm curious what'll happen to the Avengers. Same with Guardians of the Galaxy. Well, I think that's probably why they offloaded them, because they saw that they were having some trouble with their last few releases. These different studios, and so they're trying to adjust it. Which, I mean, that's totally fine. I'm glad they're doing it. Other acquisitions and subsidiaries. It has 10 operative groups consisting of 111 internal studios and publishers, and overall the group had a total of 12,150 employees in 45 countries in December of 21. So Amplifier Games Invest, Neon Giant, Silent Games, Tarsier, Zapper. I don't really recognize any of these, I don't think. Coffee Stain Holding. I don't really recognize any of those. Dark Horse Media, Comics and Entertainment. Dark Horse through Oregon. Okay. Deca Thinking Ape Entertainment. That's familiar. What do they do? I don't know. That's familiar, though. I recognize that. Deep Silver. Of course, we recognize that. German, Austrian video game publisher, division of Koch Media. What else is there? Vertigo, Voxler, Aspire. Yep. They own a lot. I mean, this is a lot. And then TVA, Crystal Dynamics, Eidos Montreal, Square Enix Montreal. That's a lot. That's a lot. So, you know, they're scooping them up. They're trying to get competitive as of right now. Let's see. Revenue, 10 billion. What is that, Krona? Yeah, they didn't really translate it. Embracer Group. Well, what I could do, what if we pop over to Seeking Alpha and we see what they're saying? Embracer Group. Let's see. Embracer Group. 922. I mean, this. Yeah, it's tough because this stock is not, or this is not rated openly, so it's kind of hard to gauge actual stats or anything on it. Yeah, it's capped out last March, so this won't tell us much, unfortunately. But I mean, it's pretty crazy. It's pretty crazy. So I think this is unfortunately what's going to continue in the industry. A lot of consolidation, especially because we're headed into a time. It's pretty well known. Like, we're already most likely in the middle of a recession. We just don't realize it yet. You know, it's funny because everybody's like, oh, we'll know when we hit a recession. The initial drop, you don't actually realize you're dropping. Everyone's like, oh, it's just a rough couple of weeks. We've had like a horrible month in the stock market. We've had a horrible month in most markets, to be fair. So we're probably already in a recession. And as a result, a lot of these studios that have been struggling, they're facing an option. Like Montreal, was it? Whichever one of those studios did like Avengers, you know, that was a major flop, a huge flop. And that's a problem. Or Guardians of the Galaxy. phenomenal game, but it just flopped because everybody looked at it and thought it was going to be Avengers 2.0. So they didn't play it until it came to Game Pass. And when you've had multiple flops, the unfortunate reality is in recessions, a lot of people get laid off because they can't afford it. Like, you can't afford to have those many flops. So what they're going to do instead, especially because some of these corporations are able to get such just absolute cheap debt to acquire these things, they're just going to start scooping them up. And they'll probably fire a lot of people. They'll clean house and they'll downsize and merge groups together, and the new management will come in and cut all the fat that they think they see. That's just how it works. But that's what's going to happen. That's what's going to happen. I mean, it reminds me of what like Warren Buffett said. He said, you know, be careful when everybody is excited, and be greedy when people are fearful. Emphasis on the latter part. Because when everybody else is freaking out, if you have the level head, you can make some serious money. And in the case of like, real estate, Trump famously said back in like 2006 or 2000, I think it was 2007, everybody was like, Mr. Trump, how do you feel about the prospect of a housing market crash? And he said, I hope there's a real estate crash, because then I can come in and buy more at really cheap prices. And everyone's like, he's so heartless. But it's true. Like, if the stock market crashes, stocks will be cheap. So if you have cash laying around, you buy it, you ride out a year of terrible returns, and then after it, when the market catches back up, you'll be making money. You just have to get over that initial freak out, you know? And that's why medium and long-term holders can make some serious money, whereas day traders can be screwed in the meantime. But all of this, I mean, I wish that we weren't seeing so much consolidation, but that's unfortunately just what it is. It's what we're going to get. I'm surprised Embracer Group was able to negotiate these acquisitions, because this seems like something Sony would have gone after. It really does. But maybe Sony just was beaten to the punch. Maybe Embracer Group has prior connections. I mean, the interesting thing is people forget that so many of these CEOs and executives at these companies, they all know each other. In a lot of cases, they're friends. They go to Epstein's Island together. Like, they know each other and they get along. It's like when the tweets leaked from Elon talking with Bill Gates, and they're texting each other about like billion-dollar matters, right? And that it just doesn't seem right to us, because we think, oh, they're playing in the realm of billions or hundreds of millions of dollars. Surely they must be like sitting down and meeting, you know, in darkly lit caverns with like 200-year-old wine, and they're sipping it. It's not actually how it works. Most of these guys, you know, they're sitting on their back porch barbecuing, and then they're texting about, you know, acquiring this $2 billion company. That's how a lot of this ends up working. And in this case, something like Embracer Group picking these guys up, it honestly could have been something as simple as the CEO or the management over at Embracer Group just had a good connection with somebody over at Square Enix and at these studios. And they're like, hey, I know you've had some troubles. Would you be open to an acquisition? Yeah, we'd look at it. And then they started the ball rolling from there. It actually does happen like that a lot. Sony would have gone after the entirety of Square Enix if they were interested in purchasing them. Potentially. Do we know how much Square Enix is? Like, what their size is? I don't actually know. Yeah, none of these numbers are right. None of that looks right. Googling it doesn't tell you anything. So I'm not actually sure, but maybe we're going to look at Sony now, though. I want to break that down. But all told, the Embracer Group acquisition of these studios, I think it's a good deal. Their debt is stupid cheap. I don't blame them for picking them up. If I could get debt that cheap, I would have done it. So pretty baller.